we're part of the Huobi research team, part of Huobi Global. So on our platform, what we do is we aim to bring you the latest insights and analysis in the latest crypto trends and topics. Where can you find us? So, you can follow us on either Twitter at Huobi_research or HuobiResearch.medium.com. Where we have a number of different reports to talk about. So be sure to leave us any questions after we're done, and we'll try to get through to them afterwards. So without ado, Hansen, do you want to go through today's topics for this week?
Yeah, thank you, Jack, for the introduction. It's a pleasure to be here chatting about the market. So here are the topics for today. We will start off with the topic of FOMC meeting. So last Wednesday, the Fed raises interest rate by 0.5% to fight inflation. This is the biggest rate hike since 2000. And the Fed stated that household spending remains strong and inflation remains elevated. Jack, what is your take on this?
So yeah, I mean, last week, no surprises with the Fed hike raising by 50 basis points. And they also announced the fact that they'll be starting the balance sheet runoff starting in June at a tune of 47.5 billion per month. This is well communicated, over the previous meetings. I think in general, previously the market saw it as a dovish take because of the fact that previously I think a lot of people were anticipating that even the Fed would hike up to 75 basis points. However, they just kind of maintained the fact that it was only going to be 50 basis points, and I think 75 basis points was off the table. So initially you saw a reaction to the upside, and then this quickly traded down. I think mainly due to the fact that a lot of people kind of recognized that even though the Fed was only raising at 50 basis points, basically you're raising at the fastest rate ever since the year 2000. So I think because of the fact that tightening is happening at the fastest record pace ever since the dot-com bust, you're seeing a lot of financial conditions tightening a lot, and that's really what's happening recently. And what's led to, I think, the crypto carnage as well as the broader general equity markets declining over the last several weeks.
Yeah, I think the market is starting to not trust the Fed and Jerome Powell, and they're expecting the central bank to continue raising rates aggressively.
Yeah, no, definitely. Yeah. Yeah, for sure. I think because of the fact that you saw peak inflation rates over the last few months, where I think last month it recorded at a peak of 8.5%. This is basically unheard of ever since I think the 1970s, right? So I think because of the fact that inflation, given the COVID lockdown globally, basically stopped supply chains to a halt, and then everything was kind of restarted right away. I think you saw this material jump in the fact that supply and demand was imbalanced. And that's really what's driven this latest, I think, inflation print.
Yeah. So the cryptocurrency market has crashed further yesterday because of the Luna UST Depeg. So Jack, can you tell me about what happened yesterday and what is your take on this event and the Luna UST Depeg?
Yeah, so I think it's good to kind of just step back and just kind of give a brief rundown on crypto markets and prices in general. I think you saw Bitcoin just trading around 40,000 just a few days ago, and now it's to the tune of 32,000. ETH at 2.4K, the S&P down over 3.2% just yesterday. Nasdaq down 4.3%. I think as a result, you're seeing a broad market deleveraging across the board. And I think initially what had happened for the Luna Depeg specifically was that over the weekend, basically you started to see some strain where the peg was already starting to trade under one, around 98.5 cents. And then what had happened was for the curve liquidity pool, you saw some liquidity to the tune of 150 million of UST being withdrawn out from that pool, with another 84 being bridged immediately to Ethereum and being dumped. I think that's what initially caused the ripple effect of crisis in confidence, and that's what led to the overnight dramatic depeg of the UST, where we saw a low of 60 cents, and Luna traded I think around $26. So down 70% in just the last 6 days, which is pretty astounding. I mean, clearly we've rebounded from there. I think UST right now is trading around. Let me just check. I think UST trading around 92 cents. So and this is mainly due to the fact that I think Luna has some critical backers, mainly in the name of Jump Crypto, and some other big OTC trading firms, which has been helping it kind of reestablish the peg. So right now I think it's a confidence game where it really depends on the fact that whether or not they're able to slowly basically repeg it back to one. So it remains to be seen. I think this is the headline that we'll be probably monitoring for the next week or so.
Yeah, I think this is a wake-up call to the market that stable coins might not be as stable as you think.
No, for sure. I think yeah. I mean, to the topic of stable coins, right? I mean, you've seen, I think, ever since DeFi summer 2020, you saw a number of different algorithmic stable coins. So Luna will be classified under the algorithmic stable coin section, where it's technically not over collateralized. So you have some over collateralized stable coins such as DAI, which basically the backing behind each DAI is over $1. So as a result, the chance of depeg is pretty much zero. For these algo stable coins, you've seen Ampleforth, empty set dollar. I think a number of these where, because of the fact that end of the day you don't have full backing, it's very prone to the fact that there's potential downward spiral effect if there's a crisis in confidence, and I think that's exactly what we've seen. But I would also caveat and say that because of the fact that Luna is so well established in the ecosystem for crypto, and there's so many prominent, I would say, crypto firms backing it, it remains to be seen whether or not the peg will remain unpegged, or whether or not they're able to reestablish that, given the fact that they have ample amount of liquidity reserves and also a number of backers supporting it. So it remains to be seen, but definitely it's a big blow to confidence on the more under collateralized stablecoins.
Yeah, I do agree. Well, I think it is now a great opportunity to start looking at some NFT projects, since historically the NFT market usually performs well when Ethereum prices drops. So, as investors see it as an opportunity to buy NFTs at a discounted price.
Yeah, no, for sure. I think, yeah, I mean, yeah, let's move on to the topic of Bored Apes. I think, yeah, this happened, 2 Saturdays ago, basically on April 30th. The much anticipated Otherside land sale by Bored Apes Yuga Labs, where basically they sold and generated more than $320 million for the startup, and it was basically the largest NFT mint by a long mile, right? Gas surged completely and was crazy. I think to the tune of during the whole minting process, basically over 60K worth of ETH was burnt in terms of just gas fees, which is I think around $160 million. So this is crazy, right? I mean, it just goes to show you, I mean, even for, I guess, the most established projects, that there's still a significant amount of demand within the ecosystem and outside. And I know, Hasan, you also took part in this. What was your thinking and experience for the whole thing?
Yeah, I actually participated in the public minting event, and it was a once in a lifetime experience for me. So initially, the ETH network got so busy that people are spending 4 to 8 Ethereum just in gas fees just for minting. And the minting process lasted for around 2 hours, and I was able to mint a LAMP for around 1.5 ETH of gas fee. So totaled with 305 Ape coin cost. The cost of getting an Ape land was around 6,000 USD. And after the public minting had ended, the Otherside land is initially traded around 7 ETH. So basically double the cost. But due to the high supply of land available and the macroeconomic environment, the price was unsustainable at 7 ETH and have dropped to a price floor of 3 ETH now. So overall, I think the other side land sale was a successful collection launch by Yoga Labs, and making Ape Coin the only accepted currency have shown their confidence in the Ape Coin system they have created. And they took no profits from the Ape Coin earned from the land sale, since they promised to lock them out for a year and not sell them. And ApeCoin now is only trading at 9 USD at the moment. So it is unrealistic to say that they have made 320 million profit during the land sale. And I believe ApeCoin is going to play a big part in the outside game, and prices will go back up once the economic model of the other side game is announced.
Yeah, I mean, yeah, definitely for sure. I think definitely they made a huge amount of money, even with I guess the current depressed prices, because technically they just printed ApeCoin and airdropped it to a bunch of people that were Ape holders, right? So technically, I think from a net wealth effect, definitely I think they just created money out of thin air, and it just goes to show I think how strong of an ecosystem and how much of a belief there is with the Bored Apes brand. But my personal take is the fact that like basically, I would say Bored Apes kind of got away with selling a significant amount of promise and hype, given the fact that like this is the biggest NFT mint by far. It basically caused gas to surge, and they basically didn't improve on the contracts to make it more efficient. So it was kind of weird for me, in my personal take. The fact that they didn't do a much better job, given the fact that they're so well known in the ecosystem on Ethereum, and they didn't look to improve on the process. So this was a little bit weird for me personally, and I personally didn't participate in it, and I don't hold an Ape. So I mean, just outside looking in, it was a little off, but yeah.
Yeah, I do agree. The high minting gases could have been avoided if they have changed their minting policies to one wallet per KY to one land per KYC wallet.
Yeah, no, I think because especially you've seen with different types of mints that's happened on Ethereum, where some of them do it off chain, and then afterwards they airdrop you the NFTs, right? I think there's definitely a number of different ways to do it, and I think they it was pretty surprising given as big of a brand and startup that Yuga Labs is, for them to go about it the most inefficient way. I think to me it's a little bit worrying that they didn't figure this out properly, and definitely the fact that I think another thing is the fact that, especially given so much money was burned, right? I know that they try to make whole on some of the people that failed to mint, but anyone that minted basically spent 1 to 4 worth of ETH just to get access, which is crazy. So
yeah, I think part of the reason why they did not take into account of high gas fees was that they can earn a lot of they have earned a lot of creative fees from transaction volumes of OpenSea. So they want the minters to pay a high gas fee and sell the ape lands at a high price.
Yeah, yeah, let's see. I mean, I'm more skeptical than you, but yeah, definitely that's what create markets. So
yeah. So personally, I feel very excited about this the side metaverse game. The art style looks amazing and unique. And when you're buying a piece of land from the other side, you need to take into account of the price differences of different types of land. So the factors that determine its value are its location, land type, artifacts, and codas. And the most expensive lands are located in the center. So the first 10K digit lands, they're only claimable by Bored Ape NFT holders, and single digit numbers land plots are being sold for hundreds of ETH easily. And the second most wanted lands are lands with a coda. Every 1 in 10 lands has a coda, and nobody knows what these cute creatures does. And they're being sold around for 20 Ethereum. So I hope these price differences and factors will not have a large impact on gameplay and experience. It's the last thing I want to see is that other side becoming a pay-to-win game. It will be unfair and competitive. People will lose interest quickly.
Yeah, I mean, for sure. I mean, so I'm just curious because you know, I mean, definitely, I think, you know, it's been known through Twitter that the coda rarity is definitely a big driver. I think, you know, so what's the ratio between, you know, having coda on land as opposed to, you know, having them without? And is the pricing reflective of that between I guess right now on OpenSea or Looksware, whether or not the pricing actually reflects that, you know, that rarity?
Yeah, so the floor price of the floor price now for the other side is around 3 ETH. So these are the prices for lands that have basically nothing on it. So no codas, poor location, and no resources. And for lands that have a coda on it, the floor price is around 20 Ethereum. So basically there's a 7x difference in them. And so basically the market is saying that lands with coda is 7 times better than lands without coda. And I think this is very speculative price at the moment, and many people might get disappointed when they find out what coda actually does in the other side.
Yeah, no, for sure. I think, yeah, definitely, because, like, you know, if you think about it, right, from a floor price of even a barren piece of land in the metaverse trading at around 3 ETH, that's what, you know, I think right now ETH is like 2,400, so that's over $7,000 US. I mean, it's pretty crazy if you're selling it to me personally, because I think, you know, for the average person, it's pretty difficult. So I would hope that, I mean, they can generate a lot of value and actually create a very meaningful metaverse experience. But yeah, I'm definitely skeptical to see how this all plays out. But, you know, definitely rooting for them to make it successful. So
yeah. Okay, let's move on to the next topic of ENS domains. And ENS domain names got so popular in the past few days and have surpassed 1 million created domains. And Jack, what do you think about this trend? And will ENS domains as important as .com domains in Web2?
yeah, no, so I think, yeah, what caught a lot of people by surprise, because it was not that I would say advertised, you know, across Twitter in general, was that, or reported in fact, was the fact that I think ENS domain names over the last few weeks have been, you know, significantly snapped up, you know, and minted by a number of different people, because I think, you know, main point being the fact that I think they're speculating on the fact that, you know, certain digits, you know, especially three digits are of a certain rarity. So 3 digits right now, I think on a floor price basis is trading around 9 ETH. I think the mid price is under 0.1, which is pretty crazy. And then for 4 digits, it's trading around 0.9. And I think, you know, so as May 2nd, I think basically, you know, over 1 million you know, domain names were created. And basically, I think, you know, how a lot of people are seeing this is that, you know, given the fact that in certain cultures, you know, certain digits are valued significantly. Like, for example, you know, in Asian and Chinese culture, you know, 888, I would say is definitely, you know, highly valued. So I think there's been a lot of memeing and hype surrounding the buying and trading of these ENS names. Of course, whether or not this kind of pans out remains to be seen. But definitely, if you think about it from a meme standpoint or rarity standpoint, me having 001 or 00 4 digits 001. I think you can see it from like a 10K profile picture kind of release where basically the lower the number or the fewer the digits is more rare, and I think that's basically how it's kind of determined the pricing so far. But I guess it remains to be seen because of the fact that for these ENS domain names, right? If you imagine more in the more distant future, technically speaking, would we even be interacting with these domain names? From a wallet to wallet interactions kind of setup, or will it be all bypassed because of the fact that from a user interface and user experience standpoint, we wouldn't even know what kind of wallet addresses that we're interacting with because it's all in the backend, right? So I mean, it definitely remains to be seen, but I think right now, definitely because of the fact that you've seen the rise of NFT trading a lot in the last few weeks. I think definitely right now it's a lot more about the memes and the hype, as opposed to whether or not there will be significant people paying a significant premium for these ENS domain names down the road, such as the fact with web2.com domain names. So definitely interesting. I won't discount it, but remains to be seen on my side. So.
Yeah, I think the utility of these domain names are still in an explorative stage, and at the moment many investors saw this as an opportunity to make money and have signed up like multiple domain names of large corporations.
And no, for sure. Yeah, for sure.
Yeah.
So I mean, it definitely remains to be seen because, like, I mean, so a funny joke I think that I saw on Twitter was the fact that a lot of some of these numbers actually expired the previous just recently because technically with these domain names you have to keep renewing it, and then people were able to remint at the basic price. So I would say if you want a certain number, I guess just wait until it dies down. And then you can probably mint it at basically at the net price without having to buy in the secondary market. So definitely when it dies down, you can pick up any number you want probably. So
yeah, people do tend to forget to renew their registration, and I think at the moment you can get 1 year of ownership of a domain by paying around 50 USD without taking into account of gas fees. And look, Huobi.eth is currently being listed on OpenSea at the moment for 88.8 ETH. Maybe someday Huobi will buy it.
Yeah, or maybe the guy that registered Huobi.eth probably forgets about it because we're still in the bear market a year later, and then probably can just remint it.
Yeah. Okay, let's move on to the next topic. Well, so let's move on to the topic of NFT lending and NFT finance. Not pretty sure how this works. Is it like a DeFi platform where you can use your NFTs as collaterals to take out loans? Can you explain it to us?
Yeah, no, I mean, so I think recently because of the fact that over the last few months, NFTs, in this down market has continued to remain very popular, especially with Bored Apes, CryptoPunks, CloneX, etc. I think what you've seen is recent proliferation of the fact that people have been demanding for liquidity in the form of borrowing against those NFTs. Because I mean, so basically NFT lending in the pure essence is pledging your NFT as collateral to borrow against. So I think right now we've seen so previously over the last 2 years we've seen more of a peer-to-peer model because of the fact that I think prior to the last year and a half, NFTs were probably less well known, and it only really exploded to the scene over the last year. So what had happened was, in a peer-to-peer model, basically you're meeting the borrower and lender are meeting each other and kind of negotiating the price and LTV and rate and duration of this borrowing, because of the fact that there's just no I would say very liquid market to borrow against. And I think most recently what you've seen, so this would be the NFT FI, where it's a P2P model. So more recently in the last few months, I think you've seen the launch of VenDAO and JPEG, which are peer-to-pool models. So in this sense, this would be similar to the innovation by Aave, where basically you would deposit your collateral and then you could borrow against it. Where basically these would be based off of Oracle pricing by Chainlink. And from there, you can borrow against it without having to personally negotiate with a counterparty. I think this is, of course, the next step, because of the fact that in a decentralized system, having to go through and speak and negotiate with one counterparty as opposed to just depositing in a collateral pool and then just borrowing against it, I think it's a no-brainer and definitely the next step. I guess right now is for me maybe it's just a bear market, but I'm definitely more skeptical of whether or not it really explode for now, because of the fact that you got a bunch of these lending protocols that just launched recently, and I would say right now, because of the fact that a lot of these NFT series, CryptoPunks, I mean other than probably CryptoPunks, Bored Apes was just born and just had his 1-year anniversary, where there's not a lot of historical market pricing. So even though someone might want to borrow against it, it remains to be seen whether or not there's a significant amount of people that would lend, right? I mean, because at the end of the day, you need a borrower and people that deposit funds to lend, right? I mean, so I definitely am curious to see whether or not this grows and scales. I think longer term it does, for sure, because of the fact that once there's more established track records for these NFT series and these blue chips, definitely there will be a lot more comfort in terms of lending against it. But right now, I mean, remains to be seen. So TBD on that front, I would say.
I think if NFT lending becomes popular, it will be very bullish for the NFT market as a whole, because of the added liquidity from those people who lended their NFTs out. They might use the extra utility to reinvest into the NFT market and further pumping the NFTs they have landed. And so for example, do you know what are the most popular NFTs right now that are used for lending?
Yeah, so I think JPEG just most recently you're just testing out with CryptoPunks. I think end of the day, because of the fact that CryptoPunks has the most track record of all the NFTs and being the OG series, that's basically been the test case so far. I think LTV right now is just around 30-40%. Nothing too spectacular, and of course, because of the fact that end of the day you're lending against art, I think it's probably hard to ask for a very aggressive loan value. So definitely for sure. I mean, one thing I would actually note is the fact that if you think about NFT lending, right now, especially with so many hacks and phishing scams, phishing links, especially surrounding the Bored Ape community and how many people lost their NFTs. I mean, I'm personally a lot more skeptical of current adoption at this point in stage, because of the fact that right now if you lose your NFT through depositing it into one of these lending pools, and then there's a smart contract hack, then basically you lose your NFT, right? So I think there's probably going to be a lot more verification and trust and security and track record that's needed, because of the fact that compared to tokens, where I think you have at least some chance to not have the whole entire pool drained. If it's with NFTs, if it's a one-on-one, then if your NFT gets drained, then you lose it immediately. So definitely I would be careful there, just because of the fact that a lot of these are still experimental stages. And even though it's good to get liquidity right now, I would probably say definitely be more mindful of that side.
Yeah, security in the crypto space has always been an issue. So let's move on to the next topic.
Yeah, so I mean, you've been following this more carefully than me, with Artifact. So I know that Artifact was acquired by Nike, back in late last year. So most recently, in the last second week of April, they launched their first digital sneakers, the series called CRYPTOKICKS. So what's all this? I definitely know that Nike has big plans for the metaverse as well as NFTs. So what's going on here?
So I think the launch of Nike's NFT sneakers is really a revolutionary moment in the NFT fashion space. And the project has potential of bringing a massive amount of physical sneaker collectors to the NFT market space. So the secondary resale market of physical sneakers is estimated to be around 10 billion. And NFTs and sneaker collectors paying expensive premiums to get the rarest sneakers in the world. Many of them are willing to spend 10,000 plus USD dollars in sneaker collecting. And I believe that with the correct marketing and promotion of these NFT sneakers, a lot of physical sneaker collectors will start to shift into collecting NFT sneakers in the future.
Yeah, definitely, I can see the big overlap between a lot of sneakerheads and these NFTs. But I guess my question, I'm more curious. I guess what's the uptake so far in terms of whether or not is the audience right now mainly still crypto native, or are we actually seeing sneakerheads buying these NFTs in bulk? Because I guess right now NFTs it's still a more recent trend in last year. How's the adoption been so far from actual people that have been collecting physical ones?
I think that most of the current collectors are still NFT of these kind of sneakers are still your NFT collectors, and many people still haven't heard about this project yet. And I think in the future, as Nike is planning to do both digital and physical versions of these sneakers. More physical collectors will join as they see these NFT sneakers in their physical form.
Yeah, no, for sure. I think definitely. I would point out that I think the unique thing about NFTs and potentially Artifact and Nike's these crypto sneakers is the fact that you can pretty much I would say probably combine it as like an AR filter like on Snapchat, right? Where basically you can have these kicks as filters, and then when you're taking a selfie, basically these can be applied. And it will look just like the fact that you're wearing those in real life, and I think that's probably definitely a trend to go because of the fact that with all these Instagram posts and Snapchats, that's where you see all these types of different types of fashion and branding being kind of publicized, right? So I definitely see that potentially crossover down the road. So.
Yeah, I'm excited to see how the ecosystem plans out in the future. So let's move on to the next topic, Azuki's.
Yeah. So for Azuki, I guess what had happened, over the last day was actually pretty dramatic as well because of the fact that, even though everyone's headline news is Luna, I think Azuki had more of a underground type of news that also got released by the founder. So what happened there?
So yesterday, the Azuki founder was discovered that he has previously abandoned or rug pulled 3 NFT projects that he started in the past. And the market reacted strongly with this news because we see that the floor price of Azuki have dropped almost 50% from 30 Ethereum to around 15 at the moment. And it seems that many people have lost faith in the Azuki team and its founder. So personally, I think this is extremely bearish news for Azuki, for the Azuki NFTs, and its founder should do something to make up for his dishonesty.
Yeah, I guess I'm more mixed in my opinion because I was just reading through Twitter and just trying to get the handle of the situation. I think definitely, for one of the projects, it was a little bit. It seems like it was a little bit more off because like a lot, the Twitter profile and everything was kind of deleted after it got launched. I think the other two was less of a legit rug pull because of the fact that they actually did deliver on the NFT series. And technically, I guess they have really no commitment to further develop it. And what's crazy is the fact that I think I also saw something on Twitter where someone was mentioning the fact that I think a lot of these profile pic series or a lot of these NFT trends and whatnot and series being launched, it's probably by the same type of people where they just go through a lot of different pseudonyms and non-names. And I think this is definitely probably a longer term trend where as much as I support the anon space, I think this is definitely a kind of a yellow flag where because of the fact that in crypto outside of anywhere else you can be anonymous. It lends itself to a lot of these more shady characters potentially having second or third, fourth chances. And it really remains to be seen whether or not that gets cleaned up. I would imagine longer term, definitely, for a series with more KYC teams and more vetted, with a good roadmap and actually delivering on it and people holding them accountable. I think that's probably where we're gonna probably be gravitating towards in terms of NFTs because of the fact that I think the market will demand it because right now, because of the fact that I think a lot of the NFTs are mainly still trading on speculation. That's mainly the reason why a lot of these, I would say scammers, but a lot of these more shady people have been able to get away with a lot of different things. So, I mean, definitely remains to be seen. I mean, so in addition to, I guess, Azuki, the main series, I mean, they also dropped recently with Beanz, right? So Beanz was revealed just last week on the 5th. So how's that series been compared to Azuki so far?
So I think these Beanz NFTs look scale, but they seem like a relatively low effort collection. And the Beanz have traded around 5 to 6 Ethereum pre-reveal, and the market's expectation of these NFTs was extremely high, and people seem to be disappointed with the production effort after it is revealed. And the market reacted to this by dumping the Beanz collection, and now it is only trading at 2 ETH. And I think the disappointment of this collection, together with the history of Azuki's founder, the Azuki ecosystem in the short term is going to be very bearish.
Yeah, no, I mean, I definitely see with the most latest news. Definitely it's gonna affect Azuki and Beanz because I mean, Azuki's floor price, I think half, trading around 12 to 14 ETH right now. And then for Beanz, I mean, initially for Beanz, I think what they try to do was they try to do it in a more differentiated type of art style because I think Azuki was a lot more serious compared to Beanz, which is more probably targeting a different type of demographic and audience. So it's definitely probably like a lower tier project compared to the OG of Azuki's. But I think some people on Twitter was talking about how that I think they were trying to target a different segment with a lower floor price such that it's easier, a lower barrier to entry. I mean, even though technically it's still 2 ETH right now, which is still 5,000, around $5,000 US. Definitely, I think trying to target a different audience because of the cuteness factor. But yeah, I mean, right now, I mean, given the crypto carnage with Luna and the general market, and just the Azuki founder, revealing the fact that he was previously a part of these different other more shady type projects. Definitely, I think right now a lot of people are skeptical. I mean, if you're in it for the art, I think right now, Azuki, if you're in it for the art, you definitely can probably still buy it. But yeah, definitely remains to be seen whether or not they keep executing. So. Yeah, I mean, so I guess right now, I mean, it's good probably to see if we have any type of questions from the chat. And let's see. So feel free, if there's anyone, in live chat that would like to ask questions, please feel free to just, send it through and, give us a shout. So I'm just gonna go through this. Okay, so there's a lot of people that I guess are talking about STEPN. And I guess, maybe we can, shed some, light on the recent trend about STEPN. So I think, right now with STEPN, what you've seen, what was a dramatic amount of adoption in the last, few months, which has really driven the fact that I think, compared to the normal play to earn games, this move to earn model has definitely, gained a lot of traction, because I think right now, right, if you think about a play to earn game, it's very hard to get in, and for anyone outside of crypto, like, you probably wouldn't like tell them to go try it out. I think for a move to earn, it's definitely it's targeting a different type of demographic. Even like, your mom or your grandma, can just download the app and just start walking, and then everything's pretty much set up in that app. So I think definitely because of that, it's gained a lot of adoption. But with that said, I mean, if you're looking at more from a token standpoint, I mean, I think it's clear with the most recent crypto carnage, where it was trading over what, $3-4, and most recently now, I think, hey, hasn't, I mean, correct me if I'm wrong, I think it's under $2 for now. Definitely, there's a lot of demand driven by the fact that it's required within the app itself, and I think that's kind of fueled the demand on the price front. So I mean, for me, I'm a little bit more skeptical on the price front, given the fact that from a fully diluted valuation, it's pretty significant. I think last time I checked, it was over 16 billion. I mean, definitely, I mean, longer term, maybe you can get there, but I mean, for me personally, I'm not as comfortable. What about you, Hanson? Do you have any opinion on this?
I'm not too sure. I'm not too familiar with the STEPN game at the moment. But if you want to see like in-depth research of STEPN, you can go on to our website at huobiresearchmedium.com. We have published in-depth report about STEPN and how does the STEPN NFT sneakers and play to run to earn model works.
Okay, so I see some other questions regarding Luna, and the price being down. Yeah, I mean, definitely right now, I mean, it's very volatile right now because of the fact that I think market right now is assessing the probability of whether or not they're able to repeg, right? I mean, if they, I mean, and if you think about it, right, if they have to continuously draw down the reserves because of the fact that you have to burn $1 worth of Luna to make $1 USD, and vice versa. If let's just say they get a few OTC firms and crypto whales, basically helping kind of repeg the asset. I mean, over time they need exit liquidity, right, for those people. And most likely from a Luna price perspective, I would imagine personally that that would probably be like the release valve. For where when those people after helping repay, where that kind of escape velocity will probably head to. So I mean, just my personal feel. Okay, well, I mean, I think if there are no further questions, I think we'll probably wrap it up here. I mean, I mean, definitely follow us at at Huobi_research on Twitter, or we also have articles at huobiresearch.medium.com where we publish pretty significantly on a pretty frequent basis on week by week. So be sure to check us out there, and then definitely look forward to catching up next week. Has it any last thoughts?
No. I'll look forward to seeing you guys next week. Yep. Thank you for coming.
Thank you.
Live.